Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with a video about the high yield dividend ETFs from Invesco. But first off, I want to thank my 150 subscribers for my YouTube channel. Yeah, I'm really overwhelmed a bit with reaching 150 subscribers after a little bit over 1 year of making YouTube videos more regularly. I started this channel a little bit over 2 years ago, but then we bought a house and I did a lot of the renovations myself, so I put a lot of time in that. And after the renovations were finished, then we moved to our new house here. Then I started taking this channel a little bit more serious and making regular videos. I'm trying to keep it up, and then it's really nice to see that the amount of subscribers is steadily increasing. So thank you a lot for that. But let's continue with the video. And I want to talk briefly about Invesco, and really briefly. So I'm just going to say that it's an American investment management company with a headquarter in Atlanta, Georgia, and it's been around since 1978, but in its current form, it's actually only around since November of 2007. There were a lot of mergers, a lot of acquisitions being made. There was also an investment scandal in 2004. But since November 2007, you have Invesco like it is now. And I must say that I really like the ETFs of Invesco, especially the ones that give a high yield or high dividend. And you have a couple. So you have the high yield bonds that they distribute, the ETFs. But you know that I don't like investing into bonds, especially not through ETF investing, because then yeah, you're open to the psychology of a lot of people that invest into those ETFs, and when they sell, the company has to sell the bonds when they are down, and I don't like that. You can look at the video that I made about investing in bonds. I will put a link in the description down below. Then you have the high yield Fallen Angels series, of which in Europe you have 4 ETFs, but only one of those is from the distributing type. So I'm only going to mention the one in this video. And then you have 4 high dividend low volatility ETFs, of which 3 are distributing, and those I'm going to discuss today. The performance that I'm giving is always in US dollar, and only for the one from STOXX, there the performance is also given between parentheses, but that's just for completeness. For the performance in US dollar, yeah, that's the main thing to compare the 4 ETFs. So first off, I'm going to talk about the Invesco US High Yield Fallen Angel UCITS ETF distributing type, and that's the HYFA or HYFA, or on other stock markets it can be here in Europe that it's FAHY. So yeah, you know the deal. Here in the European continent you have a lot of different tickers, symbols, and for the ETFs from Invesco it's not different. The total expense ratio is 0.45%, and it's an Irish ETF. You can buy it for 21.77 US dollar right now on the SIX stock exchange, and the dividends are distributed in US dollar as well. When you invest into this ETF, you invest towards 82 companies, and there is 119 million invested into this ETF. It's a sampling ETF, and yeah, the performing since its inception is 40.74%, and the 4 ETFs that I'm discussing today, they've been around since 2015, 2016. So the period is more or less comparable, but I'm mostly going to focus on the 5-year performance, and this one is up almost 20%. It's paying the dividends quarterly, and it's in the months where most of the dividends are being paid out here in Europe, so in March, June, September, and December. It's the same for the other three ETFs that I'm discussing today, so I'm only going to say the dividend yield for the other three. And for this one, it's almost 7%. And look at that. The dividend distribution of this ETF is really beautiful. Over the quarters, it's always nicely distributed. So in this regard, this ETF is really a beauty. Then you have HDLV, the Invesco S&P 500 High Dividend Low Volatility UCITS ETF. I really like the series of high dividend low volatility from Invesco. One of my subscribers put a question below a video of mine and asked what ETF I really liked, and I said the ones from Invesco are really nice. If they would put their total expense ratio a bit down, I think Invesco would have more money flowing towards it as well. Maybe if they are listening, try to think about all the extra money that you attract when you lower your total expense ratio, and maybe you will realize that when you lower the total expense ratio, that you will gain more with the extra inflow of money towards your ETFs. So hopefully Invesco is listening and they lower their total expense ratio to around 0.20%. And then I promise that I will also start investing into the S&P 500 high dividend low volatility and the Euro STOXX one, as I'm going to do with EMHD, the last ETF that I'm going to mention today. It's in this on the SIX stock exchange. It's noted in US dollar, and momentarily you can buy one share for $38.125. The dividend is being paid out in US dollar as well. And when you invest into this ETF, you are investing towards 50 companies. There is 443 million invested into this ETF, and yeah, you will see it immediately. This number is much higher than the next ETF, and I'm going to talk there about what I think about that. But it's a fully replicated type. It's been around since the 11th of May of 2015, and it is up 114.83% since then. So really nice performance of this ETF, and in the past 5 years it is up 40%. So more than double than the previous one that is also investing into the US. But then it's the fallen angels, and there, yeah, it's really important that you get that fallen angels. When they invest into such stocks, you can also be investing into a falling knife. And you know the saying, never try to catch a falling knife. And sometimes that happens. And that's why, of course, there you have lesser performance compared to this ETF. It pays out quarterly dividends, and the dividend yield here is 3.29%. So lower, of course, but the performance, the overall return of this ETF is much higher. You have distributions that are also really nice. It's a little bit lower in March, but not that drastic as in this ETF, the Euro STOXX High Dividend Low Volatility UCITS ETF, with a total expense ratio of 0.30% as well. This Irish ETF can be bought on the SIX stock exchange for 23.49 Swiss francs, and the dividend is being distributed in euros. You are investing towards 50 companies as well in this ETF, and there is only 29 million invested into this ETF. I think it's a real pity that so much money of European investors is flowing towards the US. I understand it. There, the market is booming, it's flourishing, but that's also because most of the money flows towards the US. So it's like a self-fulfilling prophecy. I've read an article this past weekend where it was stated that 70% of all the money that is invested right now in the world is flowing towards the US. And you can't forget that the US economy only represents 23% of the global economy. So 70% flowing towards 23% of the economy. Of course, the stock markets are going to boom there, but we can't neglect the European market. We can't neglect the rest of the market. So emerging markets are important as well. And yeah, I really think it's a pity that only 29 million is invested in this ETF because it's a really good one. Of course, the performance isn't that great. So the past 5 years, it is up less than 11%. So I understand it. It's more appealing to invest towards the US, but as I said, it's a self-fulfilling prophecy. The more money flows towards a place, the higher the stock market is going to rise. The dividend yield is 5.60%, and yeah, here the European market where you don't have a lot of companies that pay quarterly dividends. So I always stress that, and I always ask in my videos that companies start paying more quarterly dividends on the European continent. I hope that some companies are listening to my videos. But yeah, I'm reaching 150 people right now, which is great. But I really hope that, yeah, give or take 15 people are from companies that are just paying now yearly dividends, and when they already change it to quarterly dividends, that would be great. That would even out the uneven distribution here, and that would be more appealing for dividend investors as well from all over the world. So also from people that are living in the US, they would be inclined more to invest into European stocks. And then you have the EMHD, the ETF that is on our to buy list of my wife and I, the Invesco FTSE Emerging Market High Dividend Low Volatility UCITS ETF with a total expense ratio of 0.49%. So for the emerging markets, the total expense ratios are rather high for a lot of ETF emittent companies. But I think, yeah, this should be lower to 0.30%, and they would see a lot more influx into this ETF. And you can buy a share right now for $23.96 on the SIX stock exchange. The dividends are distributed in US dollar as well. You have 172 holdings in this ETF. That went up considerably compared to the last time that I talked about this ETF. But the money that is invested into this ETF, that went down, unfortunately. Yeah, I think it's really a pity because it was 166 million, now it's 153 million. So there is 10%, more or less 10% less invested into this ETF. And it went up with 10% in the past year. So yeah, it's not underperforming the past year, but look at the 5-year performance. Yeah, 6.70%. And as I said, it's a self-fulfilling prophecy. A lot of people, they say, yeah, the emerging market is underperforming, so I'm not investing towards those companies, those ETFs. But maybe you should do it. It's not financial advice, it's just a thing that I observe, and I think that is really important. Quarterly dividends that give us a dividend yield of 5.44%, and here you have more or less the same problem as in Europe, but here the payment in September is much higher than for the rest of the quarters, and here in June it's also a little bit higher than the other 2 quarters, which is just the other way around compared to the Euro STOXX high dividend low volatility one. So In conclusion, you can say that the high dividend, low volatility ETFs of Invesco are very nice, especially the one from the US. So I'm saying it as well. So I think it's normal that people put more money towards that one, but it's just a pity. If their total expense ratio would be a little bit lower, I think that they would have much more money flowing towards those ETFs, and maybe they will gain more money by lowering their total expense ratio than what they are earning right now. It's something that Invesco should really think about. And then, as I said, the EMHD, the emerging market high dividend, low volatility ETF, is on our to buy list. And yeah, we want to invest the dollars that we receive from the dividends from our other ETFs. So from GLDV, VHYL, and XYLF. And I said in the previous update of the ETF portfolio that I would buy it at the end of December, but I'm just going to wait till February of 2025. And why? Because yeah, I want to avoid to add one extra line to add to our tax declaration. I know it's silly because it's not that difficult, of course, to add another ETF to our tax declaration, but I just want to wait a bit with that. And then I also want to keep the percentage of cost as low as possible for when we buy EMHD. And until the end of February, which is still before the dividend of March for EMHD, I will be able to invest the dividend that we receive from VHYL on the 27th of December. Also the dividend that we will receive around the 15th of February of GLDV, and also the 3 dividends of XYLF that we will receive in December, January, and February. And the one from December, in fact, I received today. So it was 12 and 74 dollar cents. So that was a nice extra today when I got a notification on my phone. And with that being said, I thank you for watching to this one. Please consider subscribing to my YouTube channel, and hitting that like button helps out the channel enormously as well, because then the YouTube algorithm also distributes this video to other people that like this kind of content. And with that being said, thank you for watching to this one, and see you on the next one on my YouTube channel. Bye!